Hey, ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis. And today we're going to be talking about Ripple and XRP. But before we fully jump on into this video, I just want to ask everybody out there, what do you believe is going to be happening with the US dollar going forward? I'd love to hear your thoughts, as we have been addressing the US dollar for quite some time on this channel. Specifically, we have been talking about the US dollar as a dominant currency, aka a reserve currency globally, and how that is being challenged currently right now, as these nations are turning a blind eye to the dollar because of its utilization as a financial weapon. So as we look at a few things, I do want to question, like, where do you guys believe the dollar is positioned right now? Comment down below and hit that like button. And also, for those XRP holders out there that are not subscribed to the channel by now, I just want you guys to know, by the end of this video, if you guys did find any of the content interesting, maybe you learned something new, definitely hit that subscribe button and turn notifications on, as I have been uploading a ton of XRP content, and we usually do it every single day. So definitely, turn those notifications on to never miss a future update. So with all of that in mind, let's just dive in, and let's start off with this video here from 801_XRP. So we do see Sam S. Lim at DBS Bank said the Saudis' agreement to trade oil for US dollar are a major reason why the dollar is in its position today. By agreeing to use renminbi as of this month has significant implication in the long run. And yes, as we actually look at the US dollar right now, it is having a slight good rally to it, but this is a relief rally in my opinion. We will most likely hit this red line up here and get rejected yet again. This would be a total gain on the 5-day span from the bottom here to the top here, about a 3%. And then after that, I'm expecting a hammer down into the supply zone. This is like the next major support area. This would be about a 5.51% drop, and we'll most likely continue to lose the ranges going forward on. So far, we have bounced off this nice fib level. I think this is the 618, I'm pretty sure. Haven't been looking at the US dollar chart in a while, so yeah, this is the 618 fib level. So a great area for it to bounce off of. If we do continue to break out, I would be concerned, but I'm not expecting it at all. I think that this is more of a impulsive move from the jobs report. But in my opinion, the US dollar as we know it could be questioned, especially in terms of its dominance and even its value if we do lose the petrodollar deal, which is why we have been focused on the Saudi Arabia, petrodollar deal for a while, and the Saudi Arabia moves that they've been making, especially with the CBDC that they've just recently announced that they are going to be testing, and they have been pushing away from the US dollar for a while now. So this is one big event in the making, and it's questionable on what's going to happen next, because also during this entire time, what we have been paying attention to is the global liquidity crisis that is also happening. This is brewing right now. It's actually starting to trickle down into a few major areas. And I honestly wonder what could fix this. Let me know if you guys know in the comments below. And I did, of course, tag XRP there. We're going to be talking about that here in a second. But yeah, this is actually starting. This just got posted earlier yesterday. And this is oil industry in Pakistan on the verge of collapse amid liquidity crisis. Oil companies in cash-strapped Pakistan have warned that the industry is on the brink of collapse as the dollar liquidity crisis persists and their cost of doing business balloons due to the rupee's devaluation. And this is happening everywhere around the world. We just seen Lebanon devalue their fiat currency by 90%. We are starting to see a liquidity crisis, and it's tightening, and this is happening globally. There's a lot of issues happening right now around the world in terms of the economy. And we actually do see down here, so the IMF has set several conditions for resuming the bailout, including a market-determined exchange rate for the local currency and an easing of fuel subsidies, sorry, both conditions which the government has already implemented. So again, I mean, to me personally, as we look at the global outlook on the macro economy, this financial collapse that we're actually talking about, this massive financial collapse that's going to be caused due to a liquidity crisis, or crises, if you will, very similar to what we seen back in 2008. It's most likely going to happen within the next year or two. I know that that goes against the Bitcoin halving chart that everyone has been pushing around, and I even said it over on Twitter. I said, if you're going to follow the Bitcoin halving chart and, play into that, you will get wrecked. And I even said it here because honestly, as I have been focused on things happening around this entire economy, on the macro, things look like within the next year or two, it looks like we could see a major collapse very similar to 2008, and it's going to be caused by these liquidity crises. And a crisis right now is brewing. And as we focus on what could fix all of this, it's not just XRP. Blockchain and crypto itself bring increased liquidity and scale to carbon markets while driving fairer prices and increasing revenue shares for suppliers. Now, this just isn't carbon markets, it's every single major market now. I know that this is talking about just carbon markets, but if you go to Ripple's website, going all the way back to 2020, this was in April. Now, I remember reading this around 2020, and I was like, this makes 100% sense. Like, I did not think about it clearly until I seen this post. And from there on out, I was just accumulating a ton of XRP because I seen what was happening around the global economy. This was right after March of 2020, and we do see Liquidity and Global Markets 101, and this got posted on the actual Ripple website. And we do see we are watching history unfold, similar to the 2008 financial crisis. Books will be written about the events that are transpiring in the global markets today, but just like the 2008 financial crisis, collectively industries will grow together or stronger together. It's more critical than ever to provide education about the fundamentals of liquidity and its importance to the global markets. At its most basic premise, liquidity refers to the ease with which assets can be converted into cash without dislocating the market. Generally speaking, the greater the volume, the higher the liquidity, and the faster the matching between buyers and sellers. Now, they do go on to mention the U.S. Treasury bonds, which definitely does represent an example of this. Banks serve as the middlemen in the market, matching buyers and sellers. Traditionally, when the stock market declines, investors flock to the bond market as a safe haven alternative. This increased activity results in a highly liquid market where it is easy to match buyers and sellers because the difference between prices offered by sellers and sought by buyers is very small. Now, as we do focus on this, let's take a quick look at a few things around XRP during this time as well. So, as we focus on XRP, they do mention about the increased liquidity around XRP in terms of how fast it could be sent, received, and all that kind of stuff. They do also mention on demand liquidity, which we all know about. But as we do look at a few things around the overall markets, and as we do look at even XRP, I do believe that XRP could help solve a lot of the issues right now around the global economy. As we do focus on liquidity crises, what could solve it? What could help it? XRP could 100% help solve a liquidity crisis, but is the government going to look into XRP? Are these, areas around the world going to look into XRP? Not exactly. But although Ripple with on-demand liquidity already represents 90% of the FX market, we could start to trickle into the government sector and help provide liquidity for a few things. Meaning, when we take a look at the next step in the evolution of finance and the economy, we look at CBDCs. CBDCs are going to be the next evolution, as you guys are probably all aware. We have been talking about this. And yes, I do believe that XRP will play a vital role. You already know that the XRP ledger will play a vital role here as a private ledger technology. And down here, you can see, in terms like interoperability enables crypto asset and cross-border transactions when connected to another CBDC. This is where XRP plays that role as the transaction mechanism, aka the bridge currency, which also does provide liquidity. Now, why do I believe things are looking pretty rough, and why do I believe that a liquidity crisis is brewing? Well, let's go over here to the Gold Telegraph post recently about the Federal Reserve. So Jerome Powell said yesterday that the Fed could not shield the economy from a debt default. They expanded their balance sheet in the trillions with government debt purchases since 2020. The Fed has paper losses of almost $1.3 trillion in the past 3 quarters. Irony. And here you guys have those total assets. Now, again, going back to what we just read around liquidity, this happened back in April of 2020. This got posted back there where we were already starting to see those events unfold around a possible rhyme of 2008. Because again, History doesn't usually repeat, it usually rhymes. Now, where is this going to happen? When is this 2008 financial crisis going to happen? Well, it's most likely going to happen within 2024 to 2025. And I would argue that maybe by even quarter 4 of this year, we could see that major decline. Right now, we're not in a recession technically off of the jobs report. And it's actually showing that the economy, in terms of jobs and employment, and these corporations, these big companies, are actually going pretty strong. But we focus on debt. Right now, the total credit card debt in the US has reached a record $930.6 billion in the fourth quarter of 2022, an 18.5% spike from a year earlier. So, what does this mean? Well, interest rates, they've been going up alongside debt. Not a good mixture. When we look at this, okay, let's look at what will happen going forward on into like quarter 4 of this year, why I believe that we will see a major crash. Well, once the interest rates hit the market, the average individual, the retail individual, the interest rates and the debt is going to be so high to the point that most individuals won't be able to spend, most people won't be able to buy. We will go into a 2008 like crash. As we go into that crash, when we look at the specific markets like crypto and stocks, I do believe that we will see a 2000 or a 2020 like scenario where things started to crash rapidly. Now, does that mean that we won't have a great year for crypto? Absolutely not. In fact, I'm actually thinking that by around like quarter 3 or the end of quarter 3 of this year, we will see that scenario of a possible wave 5, or we'll just have a major move in the market to the upside, which a lot of people are targeting, like, 50K, 60K. A lot of people have their own scenarios, but again, I'm just really targeting a time frame. Quarter 3 looks pretty good. But you could see the debt markets and what's happening on the macro economic outlook that most people are just ignoring because, hey, price goes up. So, hey, we're doing pretty good, right? No, that's not necessarily the thing. So as we look here, like the International Monetary Fund is warning that China needs to do more in order to fix its real estate problems. You don't say. The property market contributes to about a quarter of China's GDP and has been a drag on growth, especially since Beijing cracked down on developers' high reliance on debt in 2020. This was with I forgot the name of the so it was Evergrande. That's what it was. I couldn't think of the name, but this is when like Evergrande started to be discussed quite a bit. 2021 was where we started to see them come into light, and everyone was like, okay, well, this is going to crash everything and all this kind of stuff. But the opposite happened. Markets went pretty parabolic. But as we look at the debt issue and as we look at even interest rates, all of this is going to get to the point of unsustainability. We're kind of already there. I mean, like when you go over here to the Feds, like this to me is crazy on their balance sheet, where not only are we seeing a $1.3 trillion loss for the past 3 quarters, we're seeing a problem happening globally. I think I reported on this as well back in 2021, actually, where we looked at the debt spiral of the government. Basically, we're not seeing an incredible amount of inflow, meaning, guess what? The Fed is not making money right now. They're actually looking at losses, which is crazy because all of what we are seeing around the economy is everyone posting the jobs report and looking at the growth and saying, "Hey, we're done. We avoided a recession. This, that." But no, that is not the likely scenario. As we look at things happening around the world, even in other nations, for an example, like the Bank of Japan, they have unrealized losses to almost $70 billion. That's pretty crazy to me because as we look at Japan, they hold quite a bit of US dollar bonds as well. They were actually the #1 holder of US dollar bonds. And we actually go over here. So the Bank of Japan broke its monthly record for purchases of long-term Japanese government bonds in January. Again, the money printer has gone berserk in Japan. And everyone's looking at this as well, even with like the US. They're like, okay, well, when money printer? We don't need a money printer to, go live in order for us to go, parabolic on assets. In fact, as we look at what's happening around the economy, that's what caused the scenario that we are in right now. And as we look at what's wrong with this economy currently, it's the idea that we have individuals spending far too much, that are in debt, and soon interest will swallow them whole, just like we've seen back in 2008. Most of the market is over leveraged. And I always say it's like it's the same with like futures trading in crypto. I say to everyone, like, avoid futures trading because most individuals over leverage themselves. They end up losing all their money and they go broke. Very similar to the overall lifestyle of most individuals. They have a ton of debt. The debt is associated with interest. With interest, as interest rates continue to skyrocket, like we are seeing over here from Gold Telegraph, um, this debt here is going to multiply from the interest rates. And with interest rates, they haven't even hit the market fully yet. When they do, it's essentially game over. The idea of like up only in this market, which most people have been paying attention to, instead of being realistic, that's gonna end. Now, me personally, what I have been paying attention to and why I did include Japan in this video is that they were a big buyer of US bonds, but also Japan holds so much US debt. So if we're starting to see Japan crack, then guess what? Guess what comes after that? Well, we're most likely going to start to see the US economy crack. Well, I mean, we already kind of did see it, but it's going to get a lot worse. But I do think that we have this window of opportunity before a lot of this really comes to realization, where we will continue to see the dollar fall and risk on assets like crypto and the stock market will start to go parabolic. Now, one thing that I have been addressing around crypto is also where we are currently at. We started to peak a little bit over this major resistance area, but we still need to break out of this zone up here at about roughly $1.15 trillion in order for me to get very bullish on crypto. Because until then, we could still have strong pullbacks to demand areas, like for an example, this like $870 billion range. I mean, it's a great supply zone. Or we could just like backtest around like 940 billion. Anywhere between that area is fine with me, but I just want you guys to understand that we are still very cautious right now. I think everyone should still be cautious. I think with, what the Federal Reserve is doing, I think that most of this is unsustainable. Not much of what we are seeing around the economy is actually sustainable currently anyways, but you could see exactly why nations are pushing to move away from the US dollar because things are just getting out of control in terms of debt and spending and also losses. So with that being said, I hope that you guys enjoyed this video, guys. Definitely leave a like, subscribe, turn notifications on because I'm more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. As always, you all have a beautiful day, beautiful night, wherever you guys are on this beautiful world. This has been Nick. Peace out, guys.